Good evening, everybody. Welcome to the Audit and Risk Committee, and welcome to everybody who's here in person. It's good to see everyone in person, and to anybody who might be listening in online. You should all have the agenda, so we'll start off in its order. First point is apologies. David, do you have any apologies?
Yes, Chair. Apologies from Councillor Baines. That's it this evening.
Okay, thank you. The minutes of the last meeting was held on the 1st of February, so we need to confirm the minutes. I propose approval of the minutes. Do I have a seconder? That was Abby, Councillor McCartney, first of all. Is everybody happy to accept those minutes as a correct recording of the meeting? So that's 4 of us, David. Yep. Okay, thank you very much. In terms of the actions I noticed from the last meeting, there were just a couple which were on the self-evaluation, which was sent to all members, and review of training needs, and we'll deal with those under the item on the agenda number 12 under training. Were there any other action points or anyone noticed from the last meeting that aren't covered elsewhere? No? Okay, thank you. Item number 3, declarations of interest. Are there any declarations of interest from the committee this evening? Nope. Shaking of heads. No, thank you. Any, David, have we had any deputations or questions come in?
None received, Chair.
Okay, thank you. Any questions with notice from members?
Also none received.
And any, item number 6, any notices of motion?
No motions received either.
Okay, thank you very much. So on to item 7, which is to receive the external auditors report for 2020-21, which seems rather a while ago, but so over to the external auditors, who's going to present.
I'll present it, Chair.
Thank you.
So as we mentioned in the last committee meeting, we missed that one due to the finalisation of this report. We've now finalised this report for 2021. We appreciate that it's now a year has gone by since the end of this. And I think one of the main issues to point out that is it reflects the position of the council at March 2021. So obviously a year has gone by and a lot of things have changed, especially around the financial arrangements and the financial environment that the council's working in. I think the main overall comments are it's a very good report. There are no significant recommendations. And if you go through to Appendix B, it kind of takes you through the 3 levels of recommendations. We've only made one recommendation, which is improvement recommendation or best practice. It's not saying any of your arrangements are weak, it's just improving them. It might add something to the council. And obviously officers have given a response to that. So I wasn't proposing to go through it in any great detail. I'm happy to take any questions or go through the recommendation.
Thank you. Do any members of the committee have any questions or comments on the external auditor's annual report? Councillor McCartney.
Thanks, Chair. I read it and I thought I was going to give you a hard time, but then I decided to moderate myself a little bit because I felt, for me, the tone of it doesn't necessarily reflect the position that we find ourselves in particular Section 151 officer finds himself in financially. But I mean, I appreciate that you know this is a year old now. You know, we're probably thinking more current with what we're looking at the moment. But yeah, my only observation was the tone of the report in general, which seemed, you know, every summary says we found no evidence or indication of risk here, no evidence of indication of problems here or there, and I think Sav might disagree. That was all. Sav?
Would the external auditors like to? Or was that a question to?
I don't know really. It was an a question or observation.
Perhaps the external auditors could, Paul could reply. Yeah. Thank you.
I think it's all councils are in a difficult situation at the moment financially. Through the work that we've done, you're doing everything you can, but it's not saying you're clear. You can just kind of sit back and relax. There are lots of challenges that are coming, but you're doing the best that you can with the information you've got. For example, the financial settlements only being 1 year, that makes it very hard to plan for the medium and long term. So you've got that challenge, but you've also had COVID and costs that you weren't aware of, or how that's going to affect income and expenditure. So overall, the arrangements for managing it as you're going along are very good, but it doesn't reflect the fact that in the medium term you have some significant financial challenges coming. But you've got the arrangements in place to kind of go through that process, and you're not thinking, oh, next year you're going to fall off the edge of a cliff. You're not in that position, and that's where, if you're in that position, we would be more critical, and we would have, obviously there would be recommendations, and they would be in probably the next two brackets up, which are more formal and actually identify that you have weaknesses in your arrangements.
Do you have a supplement? Do you have a further question?
Yes. So I think had we identified any issues that we thought warranted kind of the immediate attention of the committee, those would have come in advance of the full formal report. I think last year was a very difficult year all round. Auditors, external audit firms in general, are behind where we would like to be in the timetable, but we are working on getting back on kind of the correct phasing for this work and these reports. I think the point is that had we found something that we considered to be kind of a significant weakness, and have we find something that warranted those kind of higher levels of recommendation, would have been flagged earlier.
Can I just ask, when should we expect to receive this report for the next year? Would you anticipate?
Obviously, I'm going to caveat this with if everything goes to plan. I think we would like to be in a position where we've brought this report during this calendar year. I think that would be a success given where we're starting from.
Thank you. Any other members of the committee got a question?
Thank you. I was going to raise that actually under the audit plan for this year, because I note there's no date in your plan for the VFM report. So it was one that I'd identified for bringing up. So I'll probably bring it up again. A couple of things from my point of view in this document. Page 20, big page 20 from our point of view. I may be being oversensitive, but the first paragraph about the budget, I think one of the things that it suggests here that the budget is all this work being done and the budget's presented to cabinet. I'm just concerned that somebody else reading this would not appreciate the amount of time and effort that portfolio holder puts into this process during that period. So it's not just officers going away and building up a budget, showing it to scrutiny and then presenting it to cabinet. There's actually quite a lot of detailed work, and that was my concern about that first paragraph. And then on the other side, the second column, the top paragraph, the last line, talking about the log includes details of who's been consulted in making decisions. I think one of the points there that again maybe doesn't truly reflect what happened during that year was the fact that log was actually copied out to all members for information purposes. And I think from a maybe not a value for money point of view, but a transparency and clarity point of view and governance perspective, that reaffirms high quality governance. So those were 2 points. Just reading through it, I was saying, somebody not understanding what goes on wouldn't be aware of that. Certainly all members would be, but I'm not too sure outsiders would. And then finally on the page 22, the actual improvement recommendation. I really struggled with this recommendation. I looked at it and I read it and read it and read it, and I'm trying to understand the recommendation is within the risk register, strategic risk register, we recommend that each risk is mapped to the relevant corporate objectives. And my question was, why? What benefit does that really bring to us? I could possibly understand that in a very large authority where, you know, there's a lot happening, but, you know, it's like trying to keep saying Rutland is different. We're small, and I think, you know, members take a very close interest in what's going on generally in much more detail. And therefore, I couldn't see what benefit, I'm struggling to see what benefit we might get in trying just to map that as an extra piece of work. What does it add to the party, as it were? And that's really my question. The other two were really statements. Thank you.
So note the statements, and I think we can try and make sure that those kind of extra bits of detail are included when we do kind of next year's report. I think the key thing is that, as Paul said, the improvement recommendation is effectively like it's a best practice recommendation. So we don't necessarily expect you to implement it. If having considered it, the council thinks that it's a piece of work that is more effort than benefit, then that's your judgment, and it's not something we consider necessary, and it's not something we consider to be a weakness in arrangements. It's just a suggestion for improvement.
So I asked the question why and what benefit, and you didn't really answer that question for me. I'm sorry to be a bit of a pain, but I'm struggling to say, you know, what does it give us? If we did it, what would it give us? Why should we as a committee ask SALF to do this for us?
I think it's for members to be able to identify. Obviously, you have your corporate plan, which you update with your corporate priorities on a regular basis, and it's demonstrating how those corporate council priorities map into the risk register and which ones are the risks for you delivering your priorities. And it allows members just to easily map across, so every member can have a look, or officers or members of the public can just see how they map across and which ones are the ones that are at risk. And like Lauren said, it's not a significant criticism. It's just one of those best practice. It's just kind of adding that extra bit, so somebody who looks at the risk register can easily identify how this could affect your corporate plan and achieving the goals that you set out when you make the plan.
Okay.
I don't know if I'm allowed to do this, but I just want to say, Gordon, I think I can see the benefit. If you look at it in reverse, and you're looking at our corporate objectives, I can then look at the risk that will potentially impact on us delivering on that corporate objective, as opposed to looking at the way around. Just my point of view.
I think it is worth pointing out that your strategic risk register, and I think this reflects management's responses, it's quite clear how they map across, but there may be some where it's not quite clear how that maps into your corporate objective. But most of your strategic risks, it's quite obvious which priority they impact, which it's not why it's only an improvement one, and why management have made their comment of why they don't think it's appropriate or necessary.
I think, Chair, I think some of them do map to the strategic risk register, and that's fine, and you know they're there. But quite a few of the objectives in our corporate plan map to the departmental activities. I won't say risk register, but activities, and those are not ones that we get deeply involved in, and it's more for the SMT to be involved in. That's why I can understand the point that Councillor Begg is making about the strategic ones. Absolutely, big ones are important. MTFP is the number one for all of us. But when it comes to some of the lower level objectives that we set, asking our senior staff to spend time looking at that, I just question what benefit that would bring to us at the departmental risk register level. Maybe I didn't explain myself. Sorry.
I think that our recommendation was at the strategic risk register, which is what comes to members. We recognise that the departmental ones don't, because if those risks are high enough, they will come on to the strategic risk register and then be presented to members. So we're not expecting to go back to the departmental and link them to all the corporate objectives. But obviously, if one of them became risk that would, and it was linked to a corporate objective and came onto the strategic risk register, then it would easily be flagged that this is putting one of your corporate objectives at risk, and members need to be aware of it. So it's kind of, we accept that departmentally you don't need to do it. It's just, it will just flag them at the strategic risk register level. But we take your point, we take the points, and we've had discussions with Sav about why you don't think it's important to implement that recommendation, and we're quite comfortable with that. It's just a best practice recommendation that would just give some clarity.
Okay, thank you. Could we maybe ask Sav's Section 151 officer to make a comment on that recommendation?
Well, I have made a comment in the report. The management comment is mine, and the committee are asked to either support it or advise I change the comment to reflect something else. So I'm basically saying thank you for the raising the issue, but we will not implement it because I don't think it adds any value. The committee can either support that or request that we do implement it.
Thank you. Are you able to give us an indication on a resource basis, the amount of work involved in doing that?
I don't think that's the right way to look at it. I think is, do you feel strongly this would enhance our risk register? I don't think it will. If you think it does, then I will implement it.
Okay, thank you. Are there any views from the committee members? Councillor McCartney first, and then, yeah.
Strongly enough that is on my phone, but perhaps Gordon might disagree.
Councillor Becky?
I can see some value, but not enough, I think, to change my mind and South's recommendation.
And Councillor Walters?
Yeah, from the moment I saw it, I thought, what, why, what do we benefit? So I'm supportive of Sav.
And Councillor Brown? Yeah.
I support Sav's position, and before I read Sav's recommendation, I'd written down why. I was trying to understand it. So it's not because I read Sav's comment and supported it straight away, but I did tick it at the end because I think thinking it through in my mind, I couldn't see the benefit from it. And I think what you've said and what we've explained says a strategic risk level, I think we are identifying it. But once you get down to departmental level, you know, if there's something that's happening down there that becomes strategic, then yes, of course, it'll be mapped across. So I'm relaxed about it and I'm happy with Sam's comment in that respect.
Okay, so taking the feeling of the committee is supportive of Sav comment and not implementing that particular recommendation. Okay, thank you. I just wanted to gauge the thoughts of the committee and also ask the external auditor in terms of the value for money arrangements on financial sustainability, governance and improving economy. You put that we assess the arrangements under all of them. Could you just explain exactly a bit more detail of what that actually means you did to come to those conclusions?
So the work that we've done for the value for money has changed from 2021 onwards. So this report is the first year of the new requirements of the NAO's code. So what we effectively do is we review kind of key committee papers, key committee meetings. We have discussions with officers within the council. We take into account the findings from our external audits. We take into account the findings from internal audits work and from any kind of external inspections that have taken place. And we look at all of that information in the round and consider whether there is any indication that there might be a weakness in the arrangements. And then if we identify any areas where we think there is potential for there to be that weakness, we then do kind of further detailed work in those areas. So if we do that kind of overarching piece and that information gathering piece, and we don't find any indication that there is a cause for concern, we stop at that point. But if we find an indication that something warrants further attention, then we would do further detailed work in that area. And what that work is would very much vary depending on what the risk is. I don't know whether you want to add anything on the particular work that was done.
No, I think just going back to the audit plan, which we presented about 18 months ago, and it's the one today, we didn't identify anything that shows that there was a risk, that there was an indication that there was any weaknesses in the arrangements. Therefore, as Laureline said, we haven't gone, and we've done the overarching piece of work and still not found any evidence. We haven't gone into detail. Now, you can probably think of quite a few councils, large councils, where they have significant pieces of work and significant weaknesses, and there are big pieces of work that go on. I think this is a reflection that you don't have any of those weaknesses. Therefore, we've just completed the overarching work, and then and this is the first year. So obviously, this year coming, we already have this as the starting round. So we will do some additional work to kind of update it and refresh it, but we more also flesh it out a bit. It's one of those that as you go along, you will build up your knowledge of we will build up our knowledge of the council and be able to expand the narrative. It's just that from the starting point last year, where if you cast back to the old arrangements, we kind of said, yes, it was a qualified or unqualified opinion. There was hardly any narrative. We've then had to kind of, during COVID, which obviously probably wasn't the best year for the NAO to implement it, we've had to kind of start from scratch, build up the knowledge, and then and come up with this report. So it's kind of, it will be an iterative process. And as we go on over the years, it will become, the commentary will expand as we gain more knowledge and a better understanding of how the council goes and what the council's doing.
Okay, thank you. I just wanted to gauge the feeling of the committee. We did talk previously about whether it would be useful for the external auditors to come and present at a full council meeting. The timing might not be quite right now. I wondered if anyone had any views about them presenting in the next couple of months, or whether we leave it until we've got next year's and a bit more narrative, and actually have a sort of perhaps a little bit more in-depth presentation at a full council. Councillor Begg.
Would leave it till the next one. This is a year down the line now. I think we're far better off doing it with some more up to date and more relevant information, but just my opinion.
I probably take a wildly different view completely, which is that full council is there to make decisions, not to receive presentations.
Okay, thank you. Any other comments?
Kind of with Alan on this, I'm not sure. I think it would be good for the less proactive members for them to receive the report, but I'm not sure that necessarily warrants inviting you back to present again for the people that don't need the reports. I don't know. I think that's what would council benefit from it? I don't. Yeah, I'm not convinced.
Okay, Gordon. Sorry, Councillor Brown.
Sorry, I'm just trying to think about this. When the Audit and Risk Committee approved the Statement of Governance, and what else do we do at that point in time?
The financial statements.
Exactly. We then recommend that to council, or do we just say to council, we've done it? We prove it here. I just want to make sure my mind, I don't remember it going to council for approval. But do we report to council in any way at that stage? Have we done so? No.
Not generally. I don't know if the external auditors want to come in if that's the sort of practice that you do with other councils? Again, it's only worth doing it if it's a benefit and if it actually adds to.
I guess it's one of those that it depends on what the nature of the report is. Obviously, it's a good report. There aren't any significant recommendations, and I guess if there were, then that perhaps that might be the time to take it to council. I think we said the council are there to kind of make judgments. If we had some significant recommendations, then it might be for the council, for the whole the council to be made aware of it. But I think because it's a good report, it's the benefit of actually doing a presentation, and it's whether they will gain anything from actually just listening to a report as opposed to making any decisions against it. It's one of those, if there's anything in there that you feel needs to be brought to the attention of the full council, then that's obviously a benefit to present it. But it's one of those. I think it depends what's in the report.
Okay, thank you. Let's park that for now, and we'll keep it under review as to whether that might be beneficial for a specific reason in the future. Okay, so that's the external auditor's annual report, unless anyone's got any more questions. So this committee is receiving that annual report and approving the responses to the recommendation. Do we need to vote on that?
I don't believe so, Chair, no, because it's just receiving external
Yeah.
auditors, approving the recommendations.
Okay, thank you. So item number 8 is the external audit plan for 21-22. Sorry, getting my years mixed up. I'm thinking surely we've done that, but no, you're just starting to audit it, aren't you? And over to Laura Lynn. Thank you.
Thank you. So there are 2 documents attached to this agenda item. I wasn't planning to run through either of them in detail, but just the sort of the key highlights. The first document is our audit plan for the 21-22 financial year, so the financial year that's just finished. Hopefully this is pretty similar to the plans that you've seen in previous years. There's nothing in here that's sort of out of the ordinary for a local government body. So we set out our significant risks for the audit, which are the presumed risk of management override, which applies to all audits, commercial, public sector. And then effectively we have significant risks in the 2 very large estimates within the financial statements. We've also set out a materiality threshold for this year's audit, which at the moment we think will be £1.3 million. That is potential to change when we actually receive the draft financial statements, but we think that's reflective of where the council kind of sits. And we've also confirmed in here that at this point in time, we don't consider there to be any risks of significant weakness for this year's value for money work either. Happy to take any questions that you have on the plan. The second document is a document that we prepare as part of our planning procedures. So it's a series of questions that we ask of management around sort of key areas that inform our risk assessment. The responses that are in here have been provided by management of the council. We would just ask you to sort of flag if you have any issues or concerns with any of those responses, or in particular if you're aware of any fraud or any kind of legal action that is not disclosed in this document that you think we should be aware of.
Thank you. Over to the committee. Anyone? No?
So in management override of controls, is it
I
which?
confirm this, I haven't got my notes from what I've forwarded to myself, so I can't tell what page it's got.
So I think that because obviously it's your financial statements, obviously the finance department and the section 151 officer have control over the preparation of those financial statements. So that's why they're the ones that we've singled out as having the most opportunity. So yeah, it's kind of going back to my comment. It's in the preparation of the financial statements, and obviously the section 151 officer and the finance manager have the ability to manipulate the financial statements and actually override things in the financial system. So they can post journals to correct the balances and that sort of thing within the general ledger. So that's why they've got the control. Whereas,
It makes sense. We've got head of HR in there as well.
well, obviously there's, yeah. So it's yeah. So I was thinking of the audit plan, not the informant, the audit risk assessment. So yeah, the head of HR, they effectively have control over your HR and payroll system, so they could effectively create false employees, and they could go onto the payroll, and then you'd be paying them, and they don't actually exist. So you're paying for an employee, and it could be going to their bank account or a bank account that they've set up.
And that is standard best practice to include those.
Yeah, they're the ones we would expect.
Sorry, can I just, without going into too much detail, so understand about the head of HR, but presumably the payroll is signed off by somebody else, one of those other people listed.
Yeah. So yeah, it's just that the two main areas of fraud within a company or a council are around the payment of creditors, which is like the finance manager, and then through false employees. So that's why we flagged them as a thing. Even though you have controls in place, it depends. There are ways of, if you determine to do it, you can circumnavigate the controls.
Okay.
And I have seen that in practice, not in the councils, but in other places. I have seen evidence of that happening. So it's one that does occur quite regularly.
Thank you. Did you have a further question, Councillor Beggy?
Yeah, just two. One of the risk or the mitigation of risk that I've mentioned quite a bit throughout it is the whistleblowing process. How do we assure that the whistleblowing process is fit for purpose?
So that's not something we do as the external audit. So we rely on that you've got a whistleblowing process in place. I might look to Sal or internal audit for comments on it.
Well, funnily enough, this committee is responsible for doing that exact role. So you're asking yourself the question, I think, Councillor Beggy. And the
I
answer
think that was
to the
my
question,
supplementary.
yes, the answer to the question is that you have put a policy in place and approved a policy that was actually, we consulted internal audit in putting that arrangement in place. We also have an independent point of contact that people can go to, so people don't come to me because I might be the person who's committed the fraud or whatever it might be, and we have that on the website and we advertise it, and we have in the past, not recently, we have had one or two queries which shows that clearly those who did want to make a referral were able to find it and do so, but we haven't had anything recently. But I think last we had an education related one, didn't we?
I think my point is it just seems to be such a key part of the risk mitigation that if it hasn't been reviewed recently, we should at least have it back of mind.
Sorry, Councillor Payne.
Thank you. The policy was reviewed when I was in your position, Rosemary, so it probably was just over a year ago. Yeah, not that long ago.
Yeah, it does come up for regular review. Okay. Can I ask a couple of just of interest really on the general inquiries of management where you've done your questions and the management answers? There's an item number 10 that just says, can you provide details of other advisors consulted during the year and the issue on which they were consulted? And there's an answer about the new waste management contract and a programme office. I just wonder what you get out of that question, because I'd thought there was probably a lot more advisors consulted, and I was just wondering about the rationale behind that question.
I think it's just to get the information, because obviously we're aware of what's going on through our minute reviews and what work's being done. It's just that general question that actually something may be flagged that we're not aware of, that we just need some more information on. So it's the answers that have been given are in line with what we would expect from our knowledge of the council, but sometimes things get put in there that we're not aware of because either they've not gone through the committee system, or it's something that's being done by officers where it's not minuted, and it's just to flag it that we're aware of it. So it's just a general inquiry.
I think the other key thing just to note here is that, as with everything that we do with external audit, we do work to a materiality threshold. So we're not necessarily interested in kind of every little piece of work that has been sort of consulted on, but the key things that have happened during the year that might have a material impact on the council's finances or on how the council operates. Those are the things that we're looking to get an understanding of here.
Okay. So those are the two over the materiality threshold, do you think? Okay. The other one I wanted to ask, which I'm sure you've been quizzed about by the finance director, was on fees. Obviously, there's the fees overall, I think, have gone up 6.4%, but then on those other areas that you also audit, there's quite a hike in the fees for the teachers' pension and the housing subsidy. I was wondering whether you could explain that a bit more. Thank you.
So we have effectively undertaken an exercise nationally within Grant Thornton to effectively standardise the way that we're charging fees on our grants assurance work. So some of these increases will be reflective of the outcome of that exercise. And some of them, so the housing benefits in particular, the fee for that will vary year on year depending on how much work there is to do, because for that one in particular, the more issues we find, the more work there is to do. So there will be some variation in housing benefits subsidy work as part of the course. But we have effectively done a reset of how we've determined the fees for the grants work.
So are you saying there's more work to do on that one, or is that just, are you saying it's a reset?
So for the housing benefits, this year we did for 2020-21, we did identify more issues, and there was one piece of follow-up work, because I think in the past the fee was £10,000, it's 10,950 because there was an additional bit of work that we were asked to do by DWP, kind of reflected in that's what we're going to, because of the way the cycle works. If we find issues in the previous year, we're finding them halfway through the following financial year, so they're still in effect, they're occurring in the following year. So we need to make sure that quantify what those issues are. So that's kind of why the following, and so there's a bit of a lag in the fees. That makes sense.
Yes, I think so. So there's extra bits that DWP asked you to do.
Yeah, so for housing benefits,
I'm more concerned whether that you found issues that have means that you're planning to do more work.
No, it's the way housing benefits works. There's some standard pieces of work testing that we have to do, and then if we find errors in that, it kind of flows on to doing some additional work to kind of quantify it. Now, for last year, we did find some errors and we had to do some more additional work. However, when we kind of do the qualification at all the report, there are extrapolation tables in there which have financial impacts of what those errors are, so we can quantify them. There was nothing significant. Otherwise, what we would have done is we would have brought that report to the Audit and Risk Committee to raise it. So depending on what the extrapolation is, I think it was about £30,000 or something like that. So it's not significant enough to bring it to your attention. But if in the future that happens, then we will bring it and flag it with yourselves.
And I think the other thing just to note is that the housing benefits processes at the council are incredibly kind of manual. And so an element of human error occurs at every kind of council that administers those benefits. So we would always expect there to be some errors effectively, and we haven't identified anything that's out of the norm.
Okay, thank you. And the pensions scheme, is there lots more work to do on that then?
No, I think with the pensions, it's a very prescriptive approach and it's a very standardized approach, and it doesn't take account of the size of the council. So it's one size fits all. So we have to do the same amount of work for Rutland as we do for the large metropolitan councils. And I think in the past, there's been a differentiation between the prices between the two. And I think it's been recognised that that's unfair. So it's kind of bringing it up to an equilibrium, so it's fair across all of our councils for the same amount of work that we do. Obviously, there are some that are not very good, and then we do charge extra on top of that. So where they're not very good, but the records that you provide and the evidence doesn't give us any concern. It's just kind of one of those equalisation pieces of work that we've done.
Okay, thank you. Is anyone, Councillor Brown?
Thanks, Chair. I've got a few points, as you'd expect. Starting on our page 41, your page 5, key matters. I note in our response, we'll continue to provide you with sector updates via our audit committee updates. That's sector updates. I don't seem to recall getting sector updates specifically. Is this something new that you'll provide to us?
No, so when we're not presenting the audit plan, we normally present a progress report, and that kind of has a sector update bit at the back. So we set out what the progress is of the audit, and then we kind of have the sector updates behind it.
Right. So we will see that in due course.
Yeah.
Okay, thank you. That's fine on that one. On page 41 and page 44, you reference that's, and I'll go to page 44 in particular. You reference valuation of land and buildings as being a significant risk. Given that our land and buildings, I think, are gross 35 million and our revaluation reserves about 17 million, the net figure is about 17, 18 million. Would you look at the 18 million or the 35 million as being the risk? Because really, it's a piece of accounting magic that we end up with 35 rather than 17, 18.
So we are looking at all of it, is the answer. But that the 35 million, that gross figure, is the output of the council's sort of annual valuation process, and that valuation process is a very significant and very complex estimate, and therefore the scope for there to be errors within that estimate is quite significant. And when our materiality threshold is in the region of 1.3 million, 1.3 million as a proportion of 35 million is not very high. So those errors don't have to be particularly large to have a material impact on the financial statement. So that we do consider that there is that risk that the number is materially wrong. Appreciate that it probably wouldn't have a material impact on the general fund, but it would have a material impact on the financial statements.
I think it's also important to point out that this is one of the areas that the FRC takes a particular interest in. There is debate whether in the public sector it should have as much focus as it does, and we have pushed back as Grant Thornton and all the external audit firms have pushed back saying, do we need to go to this detail? And the answer from the FRC is yes, this is what we expect. We expect you to do work around those valuations.
I can quite understand the need to do the valuation for insurance purposes, absolutely, and you've got to keep that bang up to date. And I just question the extent to which we all spend time going around the circle, and our assets don't really change that much from year to year or even decade to decade. So I just wonder why we spend so much time and money on that. You've explained partially why that's the case. Let me move on then to pension fund risk, page 45. And my reason for raising this one is I really didn't understand that last sentence in the reason for risk identification. We therefore identify valuation of the council's pension fund net liability as a significant risk. Understand that, no problem. Which was one of the most significant assessed risks of material misstatement. And it was the material misstatement that worried me. I'm trying to work out why you're saying that, you know, have we misstated, or have other authorities misstated, or do you expect us to misstate? I wasn't too sure.
The pension liability again is one of the biggest figures that sits on your balance sheet, and it moves. The movements on it year on year are significant. And if you cast your mind back a couple of years to the McLeod judgment, that came out quite late, and there were actually material movements within that meant you had to correct your financial statements. Not saying that it's incorrect. It changes. If you think about it, it's in the triennial review. So you have a full review every 3 years, and then between that, they actually kind of updates it. So it's one of those. It's just that it's a big figure and it is very complex. Obviously, you have your expert as the actuary to value it. We have our own expert that looks at the assumptions used by the actuary. So it's just one of those that has a big movement. So it's not saying that you will do it, you will get it wrong. It's just there are lots of factors that go into it. And please don't ask me to explain them all because I don't really understand them all. They are very, I've seen an actuary explain how different assumptions and how half a percentage makes a huge impact, and the calculation was very complex, which is why, like I said, you have your expert and we have our experts to assess it.
Having sat through many actuaries giving that information to me, I do appreciate it. I try to avoid going to sleep on some, but the concern was this misstatement issue, and it's not to do with us necessarily, but the third party looking at it going, oh, have they misstated their pension liabilities or whatever it might be? The case may be. That was my worry on that one. That was, I just wanted to ask that question. Next one was page 48. Page 48. You're page 12. And this one did worry me, and I appreciate it's under the new or under the reporting requirements. For example, the issue of we've made certain estimations, or the officers made certain estimations or assumptions in their calculations and the presentation of the documentation, and the extent to which management would be required to provide alternative methods, assumptions, or source data that are equally valid, and then justify why they chose their own. I'm just looking again at to what extent you expect, first of all, the officers to do that, and then from our point of view, to what extent we should look for that from the officers in the statements they make to us. Because to me, that's quite a major change in what I'm looking at and seeing. Maybe I'm wrong, but that's the impression I get.
So if you go back a page onto page 11, we've kind of set out what we think are your key material estimates. So they're the ones we're particularly interested in. There will be other estimates in your accounts, but because of the value, the risk of a material misstatement in your accounts, which is our main focus, is pretty low. So if you go down there, obviously you've got the valuation of land and buildings and investment properties. We've kind of discussed that. You have your own expert that values those. And as part of their work, they will consider all of that, if there's alternative methods. And again, the pension liabilities on there. I think the other one's depreciation is quite a formalistic approach. There are only certain bits that can change, and normally they're set out in the accounting policies, which are presented to you for your review. And so I think you've probably been doing that for quite a few years without actually really understanding that that's an estimate that you've been forming a judgment on, that management have come up with. And then credit loss and impairment is kind of like your bad debt provisions, as they used to be called, where management make a best guess about what the potential bad debt unrecoverable amounts will be. Again, you've probably been looking at that in the years, and that's quite a formalistic approach as well. So it's the material estimates that we've identified are not complex for this council. They're not complex ones. There are other councils where they have far more complex estimates, where we would be looking at different approaches and whether there's different ways of estimating it.
So basically what you're saying is we're doing it already and we don't need, as an authority, as an audit and risk committee, to be seeking more information from our section 151 officer and his team. Okay, thank you. Page 53 in our report, this is the one I was bringing back from earlier. Yours, page 17. I just noted that there was nothing about the VFM on your timescale, and I'm sure you'll now be putting that on for us.
There is. It's the last bullet point on the timeline. So it's the auditor's annual report. It's the new VFM report. What happened last year was the NAO segregated the requirement for the VFM, the annual auditor's report, to be presented at the same time as the audit findings report. So in a normal year, it will be the end of November. But because of COVID last year, the NAO separated that and said it had to be ideally 3 months after the date that we signed our audit opinion. For 21-22, they've again said that it's within 3 months of issuing the audit opinion. Now we're planning to issue our audit opinion on the council before the end of November. So then this kind of says the latest it will be is February 2023. But ideally, we don't want to wait that long. We want to kind of get it done and out of the way. Because obviously, again, it's that time scale that it's out of date.
Thank you for that one. Page 56. And this is your digital audit experience, which looks very exciting. I have to say, you're page 20. Have you been using this historically? And if so, have we seen it?
So the answer is yes and no. So last year we started using it mainly as like a document sharing system, and we used it for journals. So it was kind of where you've got your working papers to support the figures in the accounts. In the past, we've kind of used to have it given to us on a memory stick or a CD. Now we've got an online platform where officers upload that information. But I think what's happening is it's the amount that the way we can use it is expanding. And this kind of just takes you through some of the ways that we can do it. So as we progress going forward, we will be using this more and more. So last year we used it to kind of inform our journals testing, which is for the significant risk management override of controls. It kind of gives a risk score and identifies which journals it based on the criteria we've put in, we should be looking at and testing to see if there's any override, any controls that have been overridden.
I picked up that point in the rest of the documentation. I just wondered whether I was reading benefits for you and I was reading benefits for you, the Audit and Risk Committee, and maybe I'm getting that wrong. It's benefits for you as auditors to take the information and to analyse it more effectively rather than come to us with the information in this format.
I think it's in the longer term, it's going to be beneficial for everybody, because as we move forward and data analytics becomes a larger part of what we do in external audit, it will allow us to do more focused work and more sort of more accurate work, because we will be less reliant on sort of random samples across the entirety of the council's expenditure, and we'll be able to drill down much more into areas where the data shows us there is more risk. And so the external audit process will become better and will become something that gives you even more assurance as we kind of move in this direction.
Not recording. It's just something which just on that point, home working in relation to asset values may be an issue. So thank you for that. That's the only comments and questions I've got.
Thank you very much. Has any other members of the committee got any further comments? Okay, so this committee's asked to approve the external audit plan for 21-22. So is everybody happy to accept and approve that?
Chairman,
Councillor-
subject to comments we've made during the
Yes.
evening.
Councillor Beggy?
I thought you were asking to vote.
Sorry, I thought you had your hand up separately. Yes. Yes, taking on board the comments that we've actually made, are we happy to approve that? Yeah, nod or put your hand up, whichever you'd like to do. Okay, that's unanimous. Thank you. Thank you very much for coming and presenting. And I do think it's good to present in person as well. I think that provides a useful forum for asking the questions. So we're on to item number 9, leading seamlessly on risks into the strategic risk register, which is a verbal update from Strategic Director of Resources. Thank you, Sav.
Yeah, I won't say too much about the report. I think it flags everything up. Just, I suppose, what are we more worried about? Probably focus on that. The first issue is around, and it was the key issue that was highlighted when we did the Director of Risk Registers work facilitated by Zurich. The simple reality is our resource position has been pretty challenging during the year. Members are aware that we've had lots of vacancies throughout the year. We've tried to recruit, been unsuccessful, tried to get agency staff in, been unsuccessful, had people leave. It's been a big challenge. I'm working through the outturn numbers at the moment, and I think on staffing alone, we've probably underspent to the tune of £700,000-800,000. It is massive. It is massive, and it's unplanned because it's not what we want to achieve. So that clearly, from a financial point of view, you could argue that's positive, but obviously from a delivery point of view, it isn't, and it's not sustainable, which is the big issue. So we've highlighted it as an issue because it is an issue, and it's going to become a bigger issue because next year we've got an even bigger corporate workload when we take into account the government's reform agenda and all of the different things that we're going to have to do around implementing the care cap. Schools white papers come out. We've got to participate in the Special Education Needs Delivering Better Value programme. We'll carry on doing our local plan. We've got big procurement projects which are still ongoing, as members are aware. The corporate workload is massive. We're under-resourced as it is, and we'll need to bring in additional resource to support it. And I think there's a genuine worry about we bringing that additional resource we need. Our members will be aware that this isn't just an issue for us here in Rutland. There is I don't know, I call it a national staffing crisis. Is that going too far? Maybe it is, maybe it isn't. Councillor McCartney's nodding her head. It feels like it where you're sitting here. When you go out to recruit, you want to recruit. We don't go out to fail. And unfortunately, we just, whether it's agency or whether it's permanent recruits, we are struggling. We are really struggling. And we're going to have to, we're trying to think differently about how we can tackle it. I know it's been a topic for Employment and Appeals Committee, and Head of HR has done some work for them, but there is no obvious answer here. There is no obvious answer, but it's certainly right that we put it on the risk register. And I have to say, the Director of Risk Registers don't have many risks on them because this is the one that dominates everything. If you talk about what's the big risk in me getting the accounts done, it's the fact that I've got a vacancy. It's not about, it's so pivotal to our aspirations and to delivery of our workload. So that has definitely raised up the profile, and it is one of the highest ranked risks now. And it's not because we are not trying to be creative, but when you've got a national shortage of 20% of social workers, and we haven't got social workers here in Rutland, it's challenging, you know. And that links, I suppose, I don't want to say nicely, into the next point about financial risk, because when you have why does the finance risk feel more acute? It feels more acute because the landscape is just, it's just so challenging. We've got the cost of living crisis, which we don't really know what the full extent of the impact of that is yet. But we do know every time we go to do something as a council, it seems to be costing us more than it did last week. We know that suppliers are struggling, suppliers giving back work to the council, or saying, home care providers saying you need to increase the amount of money you give us because fuel costs have gone up 50%. We know that's happening. We've now got the Homes for Ukraine that we're dealing with. Not sure if we're going to be paid to do that from funding from government. We've got government reforms pending. We still don't know what the financial funding envelope will be for those. It just feels very, very volatile at the moment. And my MTFP feels like it's probably light in terms of costs. There's probably going to be more costs coming down the pipeline that we don't know about. And I suppose we're going to have to get used to operating in this environment where there will be volatility and things will change very quickly. And I think that, you know, back to the issue on staffing, why do I worry about staffing in the context of that? Because all I can do is see, you know, wage inflation substantially. You know, we've heard anecdotally about social workers, you know, being paid significant sums on an hourly basis to leave permanent jobs. So everything points to that wage inflation. We haven't seen it necessarily yet, but we know, don't we, shortages of drivers, shortages of people in care homes, shortages of social workers. It all points to one thing. So yeah, the financial risk feels more acute. I've come back to the point, you know, Councillor McCartney, where you started tonight with your point is the auditors are talking about arrangements. Arrangements are fine. It's a bit like if you've got somebody with a heart problem, you know, the arrangements are fine. We've got a heart doctor looking at the patient, but it doesn't mean the patient will survive. And that's what the auditors are saying. Your arrangements are fine. You've got the heart doctor in place, but doesn't mean you're going to revive the patient or do the necessary or be successful with the surgery. And that's where we find ourselves financially. Actually, our arrangements are fine. Whether we get the results we want is another issue. So that feels like a heightened risk for me, the financial risk. I think we're going to have to accept that no matter how much extra work we do, it'll still be a big risk, and it'll probably change very quickly. So I'll say one thing today, and in a month's time, it might look very different again. I'm worried about that one, particularly with the big procurements pending. So when we go out and procure the waste contract or highways, and you look at cost of fuel and all the things factored into that, we're going to do pretty well, aren't we, to try and match the cost that we have now. It does look, yeah, it looks challenging. That's what I would say. But those are the two issues which I think have raised risk profile, if you like, in the last quarter. You take any questions, Chair?
Okay, thank you. Yes, I'd be totally in agreement with that. The fact that you've identified and recognised those risks, but as you say, that they're there to keep them in the eye, but actually, in terms of solutions or mitigating them, it is a real challenge. Has anyone got any particular questions on the risk register? And Councillor Walton.
I sort of have and sort of don't. So it's a long time since I sat on this committee, so you'll remember me being here. The risk register looks a little bit different, and in a way it looks better. It's all tightened up, and it does look as if it is actually allocated to our objectives and departments, even though it's not actually written in that way. But we used to have things on there like the risk of political instability and inability to make decisions, and that sort of thing seems to have disappeared. Is that a conscious decision, or is it because we don't have the three amigos here anymore that Sav will remember? I just worry that there's something not there, and risk to reputational damage with this send all looks very pretty on here and it's all sorted, but actually we have petitions being presented. I'm just raising it. I'm only here for 1 month. So.
You're right. It was a risk. It was a risk before. There was a risk before. When we did the directorate risk registers, there were risks raised around politics, particularly in terms of how that impacts decision making and the speed of doing that. And we we have got a session next week at SMT to look at the Director of Risk Registers and see whether we think that we might elevate some. But there's no doubt in certain political environments, it's easier or quicker to do things than in others. And so we do need to think about whether the landscape does make a difference. I'm not saying it does or doesn't, but it was raised certainly in the Director of Risk Registers as being potentially being an issue. But we'll have to look at that. But yeah, but it's not on there as it stands.
Any other questions? Councillor Brett.
Sorry. Just coming back to Sab's point about inflation on our cost side. Looking forward, I'm also worried about recession because inevitably, if we keep getting inflation going through the roof, the Bank of England will step in, higher interest rates, that'll have a big impact on people's spending powers as well, mortgage rates going up, etc. And I'm just wondering if our income stream then is affected, i.e. council tax, because more and more people go into council tax support because of that situation. So I think there's two sides to that coin. It's not just about inflation, it's about lack of income as well through the impact of a recession. But that's a longer term thing. I would be thinking 2 years out maybe, rather than just the next 12 or 18 months. The other one was cyber security. I know we're looking at that later this evening, but in terms of risk, one of the things I picked up was Gloucester are still waiting to find out if they're insured for their cyber attack. And I just wondered if there's anything on our risk that we should be considering in that respect, looking at the Gloucester situation, understanding that.
We've just had something back from the insurers and we need to see what was agreed, but it's, you can't fully insure against that risk. So it's something we're looking at the moment. They used to, I read the email today. We didn't inquire whether there was some sort of cyber risk package.
Yeah.
Insure against. Canvass the view, of my colleagues to see what their situation is and to see whether there's anything we need to do. There's certain bits that you insure, like equipment and stuff like that, but no, it's something that we're looking at now in relation to whether we can mitigate that risk in some way, shape, or form. But there doesn't seem to be a an off-the-shelf package that you can have, and I think it's my understanding from the email, which I can't record. I've got it on my phone, but I can't record. But it's almost like too risky for them to do, and that's what happens with insurance, isn't it? When there's a likely liability or likely to pay out, either the premium is substantial, it's a waste of time having it because it's so big, or they don't offer the service, and that's what they alluded to in their email. So I want to see whether other suppliers offer it, because insurance is something that we have got to tender for this year. Although there's not many suppliers in the local government market, which is a different issue.
Yeah, I just noticed that Gloucester one. I think there's one up in the northeast. Where one of the authorities, Redcar, yeah, it was Cleveland Redcar, who are expecting money from government to help them out to sort out their problem. So interesting issue, but it's one that we've got to be aware of, and maybe it's an action point for the next committee, just to remind ourselves for you to come back and give us some information on it.
As I say, we will find out what support is available.
Councillor McCartney.
Yeah, I can't see inflation going anywhere but up either. And if, like you say, we find ourselves in a position where suppliers are coming to us week on week or month on month saying, I'm afraid our costs have gone up, we need more from you. What mechanism have we got in place to put our own fees and charges up ad hoc or quickly? We don't have a mechanism for doing that. To be what?
I mean, a lot of our fees, aren't they, are set nationally,
Yeah.
or and those which we have discretion of, which the biggest is green waste, which obviously we've addressed with inflation, and we will look at it every year. But I don't see that being a panacea to the big issues that we're referring to. But yeah, it's a worry, because in a lot of areas where suppliers have come back and said we need more funding, it's services that we can't simply turn the tap off. So if it's a, home care, some sort of social care provision, you can't turn the tap off. So that does make it challenging. But we don't have an in-year mechanism really to look at fees and charges. Given the amounts involved, I don't see it as being on a cost benefit sort of analysis, and given everything else we've got on, it wouldn't escalate on my priority list, I have to say.
Thank you. Anything else from the committee? No, thank you for that. And I think the dashboard and the way it's presented now is really helpful, and thank you also for updating on obviously you've been working on the directorate risk registers, which was something that was asked for, so it sounds as those have been making progress, and obviously you can could report when you progress.
Yeah, we've done the risk I can update now. We've run the risk identification work, but as I say, there's a lot of coalescing around 2 or 3 particular risks, like I can't get the staff in. And that's why we want to talk about it corporately, because there's no point having 3 registers that say the same thing. So it's helpful actually that we are coalescing around 3 or 4 risks, key risks. It's unhelpful that there doesn't seem to be an obvious solution. But yeah, we can update, but Rachel will be helping us do the next phase. But we didn't really want to go on to the mitigation because we didn't want to do that in isolation because the commonality. But yeah, finance and staffing are the 2 big issues raised, unsurprisingly.
Can I ask the directorate's finding it a useful exercise to do?
Oh, they found it very therapeutic. I can tell you that. They found it very therapeutic, and it was helpful. It was done slightly differently to the way we do the strategic risk register, because the strategic register is done in a way that presents better publicly, I think, whereas the ones in directorate level are a bit more nitty gritty. It was helpful for each individual directorate to work with Zurich, and it was fascinating that we all came up with similar type of issues, even though it was, it was sort of done separately, and that's why we want to look at it corporately. But it was an eye-opener, but also I think made us realise that we need to tackle the sort of big themes collectively and head on. And in relation to staffing, we all think we're doing what we can, but we really got to challenge ourselves about how we need to think differently. Or we might have to corporately say, actually, to meet priority X, we're going to have to stop doing things. We are not very good at doing that. Corporately. So I think we've got to do, I think it's going to help us, I think, try and develop better mitigations for the issues that we've got. Whereas at the moment, it feels like we're not doing that as well as we can. So we're not standing stuff down or deprioritizing corporately. And members clearly have a role to play in that as well, in that process, because it can affect the services that we get. That our community gets. But yeah, but we will update on that when we've made more progress.
Okay, thank you. So as a committee, we're noting the content of the risk register and also the actions that are being taken. Is that okay with everybody? Okay, thank you. Item number 10, over to Rachel for the internal audit update. Thank you.
Thank you, Chair. So this is the latest update on the delivery of the internal audit plan for 21-22. So there's a copy of the full progress report as the appendix and in the usual format. So a copy of the table 1 on pages 120 onwards from the pack provides the internal audit plan as at the time of producing this report, which shows that we had delivered all but one of the audit assignments to at least draft report stage at the time of producing this report. And we had finalised a further 4 audit reports since the last committee meeting. the outcomes of which are incorporated in the table as well. So those were in relation to the lifetime offer, which is effectively the transition service between children's and adult social care. Cyber security, as has already been mentioned, as one of the council's risks this evening, the payroll system and adult safeguarding. So the outcomes of those are included in the table, and members will have received full copies of those final reports. All of those have received at least a satisfactory assurance opinion for both the design and the compliance with controls in those areas. As I've mentioned in my report, the cybersecurity report has received a moderate organisational risk impact. I think this has to reflect the fact that the risk in the environment that we're operating in, and the fact that whilst the council has a substantial action plan in place, which they're looking to proactively strengthen controls and align with the good practice that's advised by the National Cyber Security Centre, working with them to strengthen controls. That work isn't yet completed, and there will be a report back to this committee later in the financial year on the implementation of that. But pending the implementation of that, we've given a satisfactory assurance opinion as at the time of reporting. And as I say, that presents a moderate risk until that's fully completed. So I can also provide a further update on the audit recommendations in Appendix B. We have 5 recommendations which were overdue at the time of reporting, all of a low priority, so none of those of concern to me, to be honest, nothing that flags a risk, but one of those has since been completed, so that has gone down to 4 recommendations which are overdue as at this evening. Of the reports that hadn't been finalised in time for this committee paper will be fully summarised for you in the annual opinion and report, which comes to the next meeting of this audit committee. So you will, of course, receive one of those outcomes at that point. I think that's a quick run through of the report, Chair, but I'm happy to take any further questions. Thank you.
Thank you. Anyone got any questions? Councillor Brown will have.
So there's a lot of red circles and squiggles and things. Yeah, I know. Sorry about that. The payroll report, I'm struggling to find that report. I looked on the Teams and I can't find it there, and I looked in my own report that I put them, my own file I put them into, and I couldn't see that one. Where because that's a final report you've just issued in the last 3 months, isn't it? I'm just looking towards Tom to payroll. Yeah, I couldn't find it in the 2021-22 Teams folder. I could be wrong.
We thought we'd sorted the
I thought we
process,
had, yeah.
process out on this.
The rest, cyber security we've talked about already.
Yeah.
Happy with that. I don't know if there's anything else. Adult
The adult
safeguarding. We talked about.
safeguarding.
Yeah, that's all.
Yeah, I'll make sure that they're circulated after the meeting if that hasn't gone out.
I just had one, can I just start? It was about the adult safeguarding, which you've got a substantial control, that was all fine. But sorry, I haven't got my actual report in front of me. And I just noticed that, I think it was under point 3 of your 10 inquiries done. Sorry, of the I think there was 25 inquiries, 10 were not done per the procedure, but you still marked it as a, I maybe have to pick that up afterwards because sorry, I haven't got the actual report in front of me. I just think there was quite a lot not done per the procedure. I've got point 3. You got medium recommendations.
I'm not entirely sure which bit that referred to, but I'm happy to look at it after the meeting
Yeah,
if you want to give me the full details of which
yes, I will
section
when
that was.
I've got the report. in
But
front of me.
certainly from my recollection of the findings, there was nothing that caused us concern in relation to the compliance. But as I say, I'll look into that specific query if you can send me the details.
Thank you. Did you have any other questions? Okay. Just, yes. Thank you. That's fallen through the system, had it? Yeah, okay. Okay, actually not really a question on this, but more of a question of interest. That was really good news that we had the extra grant for the cybersecurity work. How are we spending it? Is that being spent on a person, a consultant, a system?
No, there's an action plan with a range of things. Include some of it is buying some software that allows us to monitor whether the network's being penetrated, various different things. Andy will towards the end of the year, once we've done a lot of the things on it, we can present back the sort of things that we're doing. We said we'd do something on cyber risk, and we'll do that.
Thank you. Any other questions for Rachel in terms of audit? And then it's on to the plan for 22-23.
Okay, thank you, Chair. So this is the second report. Obviously, we're just into April, so we have actually already made a start on the plan, because as we agreed at the last meeting, we had a delegation to agree an interim audit plan. So I'm actually really pleased to confirm, whilst we've completed your last year's plan, as I've just reported, we've also made good progress actually already on your Q1 audits as well. So members will have received the corporate parent survey recently. So just a chance to mention that and encourage any responses. So in the paper this evening, there is a copy of the full internal audit plan that's brought to the committee for approval in table 1 on page 133 onwards. So I don't intend to go through this line by line, but as just reflecting on the minutes from the last committee meeting, the committee will be assured that those areas that were flagged as areas of priority have been incorporated in the audit plan that's brought to you this evening. Those included the corporate parent, as I mentioned, home to school transport, and the waste contract procurement, for example, which have all factored into the draft plan. I have also brought to you a reserve list as table 2, just to cover off all of those areas that had factored into any of our discussions up to this point, just to set out how we intend to get some assurance over those risk areas. Some of those we'll look to cover in 23-24 once we get to that audit planning process, and some of them I've proposed other ways that we may be able to get that assurance. So the plan is brought to the committee for formal approval this evening. We will then obviously use that as our basis for delivery of audit work for the year ahead. Also included as Appendix B is the Internal Audit Charter and Strategy. So this effectively sets out how we deliver your internal audit service. Substantially, there's no changes here really to how we plan to deliver your audit service. You're probably not surprised to hear. What I have done is tried to just review it, just to make sure it's fully up to date in terms of terminology and reflecting the latest in terms of good practice and the guidance from the various bodies. But as I say, there's no significant changes here in terms of how we conduct our work or any of the categories, etc., that we apply. So that does come to this committee on an annual basis for formal approval in line with the public sector internal audit standards. And that's why it's brought to you this evening. So I think that's a quick run through, Chair, but again, I'm happy to take any questions. Thank you.
Thank you. We obviously have discussed the draft at a previous meeting and had some emails around what ideas to be included. So thank you, Rachel, for actually pulling that together. And I think, for covering an efficient way of actually covering those areas. Has anyone got any particular questions or comments?
And I don't know if there's particularly too much detail at this point. I'm looking at the SEND audit, which is scheduled for Q3. There was a very detailed and interesting scrutiny panel very recently on this subject, and seemingly there are potentially issues within that system that need addressing. My two questions are: one, is Q3 too late considering what the output of that scrutiny was, and do the panel think it should be brought forward? And are the terms of reference wide enough, because this seems to be looking at mainly timeframes and benchmarking as opposed to necessarily the whole process through to tribunal, and some of the concerns that came through from, I believe it was 62 concerned residents, and whether or not that audit should loop in scrutiny in the Rutland SEND group for their input.
you like to respond, Rachel?
I don't know if you want to discuss it as a committee. Yeah, it's something that I can take away. I can ask for further detail of that. Obviously, it's not something that we've been party to as audit. It's obviously something that's being dealt with through the scrutiny process, but I can look into that to see if there is any implication.
And I think it was certainly something that came out about the, that was raised, I think, within this committee, and also internal audit had looked at it. So I think, and also by contacting the, the other scrutiny panel. So I think it is important that we look at these issues as a whole rather than in a more fragmented way. And this has all come together through that. Councillor McCarthy, did you want to say something?
Well, I was just thinking, in particular, that comments that we had from the 16 members, whether that's something that can quickly be resolved, pass on to an audit. I don't know.
It's not really for internal audit, is it? If there are issues with the service, which have been raised quite rightly with management, helpfully, then it's for management to go away and address those issues. What the committee might seek assurance of is internal audit's view that those issues have been adequately addressed. But it's certainly not for Rachel to do that. It's for management to fix those issues if indeed there are issues. And Rachel can obviously give assurance, and Rachel can liaise with the director to see whether the timing that you've proposed might facilitate that. But that's the right thing to do in terms of due process.
And for internal audit to be looking at the procedures and timeframe from your perspective, which is what you plan to do. So is the committee mindful that actually we just leave you with it's a timing issue in terms of when would be the appropriate, and whether that would be something, having discussed it with senior management, that is actually more appropriate to bring that forward and in your work plan. Two comments there. Councillor Walters.
Yeah, I think there's a huge difference between our responsibilities and the public's expectations. And I presume Rachel should be looking at our responsibilities, not what people want us to do.
No, exactly. I think it's more if the timing is coinciding, the timing of that work which is planned anyway.
But yeah, I presume the timing is to coincide with seeing that plan has worked rather than preempting it.
Yeah, I was just going to say, if there may be changes to process, if that's appropriate as a result, and then we can look at that. But that's not something, we obviously won't be looking at complaints specifically. We'd be looking at the process and the procedures around how these things are handled generally.
Okay.
Chair, can I pick up on that? Because I think the timing is quite an important one. I seem to recall 2 years ago now, it's a long time ago, we looked at the SIL arrangements prior to it being changed to identify the shortcomings of that system. I'm just wondering whether there's two parts to this, looking at it pre the changes, make sure that we fully understand if there are any process faults, and then a further piece of work later on, maybe even early next year, before we have another Ofsted, to make sure that we are really in place, and also the changes that are coming along with the green paper. Just a thought, put it with you.
Something, yeah.
So I was just going to say, obviously I'll speak to the director and see how we can best use the audit time and whether there's any benefit in coordinating around any other work within the service area.
Okay, I think that'll be a useful thing to do and report back to this committee to get the maximum value out of your work as well.
So I think from the comments made from the table, I think what we're saying is we have a concern, and therefore it's something we would like to see a higher priority on. I think is the question is how it's done and when it's done, but it is a high priority for the committee, I think, given what's happening. Okay, and the costs that we incur as well.
Well, it is an area where we are spending, we have accrued deficits of over £1 million, and we continue to accrue deficits. So I'm not familiar with the debate that was held at scrutiny, but it sounds like we're disappointing some of our community. And yet we're spending far more than the funding that we are receiving. So my aspiration would be that we can fix bits of the system that we need to without having to spend substantially more money, but we'll see what the conversation with the director is.
Thank you. Any other comments on the audit plan? No, so we're happy. So we've been asked to approve the proposed audit plan work, obviously taking on board that comment about the send and the internal audit charter and strategy. So that's point one. Is everyone happy? Can I ask for those in favour to raise their hands? Thank you. And the second point is to approve delegated authority to the Strategic Director of Resources in consultation with not necessarily myself, because it's the last meeting of this year, with the chair of the Audit and Risk Committee to agree amendments to the plan during the financial year if required. So everyone, all those in favour, please raise your hands. Is that okay, David? Yes. Okay, brilliant. Thank you. Thank you, Rachel. Right. Failed completely on the So we're now on to item 12, which is review of training needs, and I had previously sent around a self-assessment just to gauge if there was anything particular, and I think the thank you to the members who completed that. The main thing coming out of that actually is our sort of review of ourselves in terms of our annual evaluation of what we'd done, which we is not something that this committee has done in a sort of formal way for the last few years. And so I think what I'm proposing is that we actually have a look at that and see if we can actually, it's always useful to think what we've actually achieved. And so I'm proposing that I will just see if I can pull something together on that for a future meeting. We also looked at training needs. Well, we've discussed training needs, and in the past we have had a half an hour sort of session before each of the Audit and Risk Committee meetings, which obviously going forward with a new committee from May, I propose that we actually agree that as a sort of in principle. The external auditors have said that they'd come to I think would be the September meeting before, which is the one at which we look at the draft annual governance statement and annual accounts, and do a short session before that meeting for the committee in terms of a bit more explanation in terms of what we might need to look at. Obviously, the mix of skills on this committee from May, we don't know who'll be on it, but I think that's a useful practice anyway. And if members of the committee are happy with that timing, and we can sort of work on the basis that we'll have a bit of training or something before each of the meetings. Has anyone got any thoughts on what might be useful? Or do we not think we need anything? I think for the new committee, it will be worth a conversation with the new committee if anyone's got any specific areas.
I was just hoping that we've got to go with the assumption that the committee could have no experience of auditing.
Yes.
Risk. So I think you've got to be prepared for going back to basics. This is what it is, and this is more what it isn't.
So I think that probably for the first meeting in July, we have a bit of a session looking at the terms of reference and the types of documents we're looking at and the questions to ask. Then the September one will have the auditors, and we can take it from there. Does that sound like a plan? Brilliant. Okay, thank you. I've not been notified of any other. Actually, the only other thing I just wanted to report under the training was that I attended the inaugural meeting of the East Midlands Audit Committee Chairs Forum on the 22nd of March, which has been set up to to share thoughts about audit committees and experience. So it was very much an inaugural meeting, so it was really talked about who was going to chair it and what sort of things we might talk about. So there's nothing particular to report. It was on Zoom, so I'll report back, or I'll hand that over to whoever's chair after May to actually, if there's any other, or perhaps any joint training that might be useful gleaning from that. 13, any other urgent businesses? So I've not been notified of any. Has anybody got anything around the table? No. So I think that concludes the meeting. Thank you to everybody. Thank you to the committee, because this is the last meeting of this particular cycle. And thank you for presenting from Internal and External Audit and Finance Director and Karen from Cabinet and Governance for keeping us in order. And we're finishing at 8:35. Thank you.
Thank you.
Okay.